Hi, it's Helen Tarrant. Welcome to another episode of Commercial Property Roadshow. You're here with Helen Tarrant. Now, you'll be looking at a commercial property and you'll be thinking, is this the right property for me? Should I be buying this property versus another property? Which town should I be buying in? And you start going to analysis paralysis, and that stops you from buying the first commercial property. And you're listening to other people say, some say to you, oh look, it's too risky to get into commercial, or you need too much money to get into commercial, or some people say it's not the right time to buy commercial property. So you're really wondering, who should I be listening to? And how do I really get started in commercial? Well, there's three big myths that stop people from buying commercial property, and I'm going to debunk them for you right now and show you now is the best time to buy a commercial property, because the best time was 5 years ago or even 2 years ago, and the next best time is right now, because you can never make up for lost returns in yield, which means the return you get on your money in terms of the cash flow component, as well as missing out on the cash flow and the rental income. So that's why there's never been a better time than now, because you might be looking back and thinking, well, if I got into the market 6 months ago, I could get a better return than now. But just imagine if you didn't get into the market for the next 6 months, you will get a lower return than people who got into the market now. So that's why now is a good time to buy. So let's get into the three top myths. Number one, you need a lot of money to get into commercial. That's not true, because when I started in 2012, I started with one commercial property at $360,000. That was a retail shop front with a restaurant tenant in there. Now today, you could buy another property just like that for $360,000, or even less, or a little bit more. Perhaps not in Metro Sydney, but certainly in other areas around Australia. In fact, here are some examples of it. So you see, if you started out and you're just starting out small, you could start with a property that's $300,000 in an area where the residential property could be 3 times as much as that. If you think about it, if in areas like Metro Sydney you could buy a property around $300,000 to $500,000, that's equivalent to a 1-bedroom apartment. Sometimes you can't even get a 1-bedroom apartment in Sydney for $300,000 to $500,000. So you got to think sometimes it's better to get into commercial in an area where you can't get into residential. And this definitely applies into many areas all around Australia, not just in city, but also in regional areas as well. But also the returns in commercial are much higher than residential, so it actually helps you to accelerate your portfolio. But the number one step is, don't let the amount of money you have as a deposit stop you from moving forward in buying the first commercial property. Really get your finance checked, and we can help you and refer you to a finance broker or give you some general guidance around that. But get your finance checked so you know how much you can leverage. You can set out a purchasing plan or a savings plan so you can really get to your goal for your commercial property, and also understand how to move the parts around in case you need to access equity or money from your self-managed super fund or money from your principal home. Or alternatively, you can look at doing joint ventures to get that deposit for you to get started. But remember, determination is what you get started in your first commercial property, not the myth that you need a lot of money to get started. So even with a small deposit, you can buy your first commercial property. Number two myth that people think about is there is too much vacancies in this market. There's too much vacancies, so therefore it's not possible for us to get a secure commercial property. Well, there's many tenants out there that's been in the commercial premise space for the last 10 years, 15, 25 years, and they continue to be there for the next foreseeable 10, 20, 30 years. Now, there might be medical tenants, there might be trade tenants, there might be professional tenants, but either way, these are tenants that are anchored to your property and will continue to deliver rents year in, year out. And it's all about them finding the right type of tenant that fits the location and the property itself, as well as looking at the area and how the area is gentrifying, look at where the walk traffic is, and also assessing the property deal on its own. That's the way to minimize vacancies and to check to make sure that there's very little vacancies in the future, and that the re-tenancy rate is much more smaller in comparison to others in the market. Now, if you need help, and this is where you do need expert guidance, you can always reach out to me at helentarrant.com or on Helen at Commercial Property Cashflow, so Helen at Commercial Property Cashflow, and I'll be glad to help you on a strategy session which will map out for you what's the best commercial property for you to purchase. But don't let the fact that you worry about vacancies stop you, because there's many other strategies you can build around it, like perhaps buying a multi-tenanted property, or perhaps buying a property that's a different type of property, so maybe a residential and commercial, or maybe a warehouse property, or maybe a property with other potentials in there, so that it minimizes the risk of the vacancy. Number 3, the big myth that stops people, because we're so used to investing in residential, is that we're looking for growth, and we think that commercial property doesn't have any growth. But you can see that there's actually a lot of growth in commercial property over the years, and you've been evidence in seeing that in properties in metro areas less than regional areas. But that doesn't matter. It's all about actually delivering the cash flow versus growth, risk versus security balance, rather than blanketly saying there is no capital growth, because in commercial property there is capital growth. And I can show you just this example of what the capital growth is like. This property itself was actually bought. This was actually my old salon property. So I bought this property. I didn't buy this property. This property was bought by the owner of my salon when I was renting it, and he bought it in 96. It was sold again 10 years later, and then again, and now it's sort of repeated, and it sold itself for over $2 million. So it's gained 30 to 40% every time it's sold, which means that there is actually capital growth in commercial property. Now, if you're buying regional, you're going to have less capital growth than you would have in metro, but buying a regional also means you get more cash flow than you would get in metro properties as well, because mostly in metro property it's about a holding income, or you wait out for growth, whereas in regional you get the cash flow first and the growth comes slowly as well. So it's balancing, remember, cash flow with growth, risk with security. And again, this is where you need expert help. So reach out to me at helen@commercialpropertycashflow.com.au, and I can help you personalize that strategy and what the first commercial property should look like, or maybe your 10th commercial property and what that should look like. So remember those 3 myths, because each of those are big myths that's stopping you. But if you do your research and your due diligence properly, there's never been a better time than right now to buy commercial property, because the yields are compressing, and if you buy in the right area, in the next couple of years you're really going to reap the rewards. So the myth that we've busted: firstly, that you need a lot of money to get into commercial property. That's not the case. You do not need a lot of money to get into commercial property. You can start with a small space, sometimes in an area that is going to be cheaper to buy commercial than residential. Number 2, that there is a lot of vacancies. Now, if you buy right, do your due diligence and know the type of property and the type of tenant and whether that suits the property, you can avoid that. So let's wipe that out. Number 3 is that there is no capital growth in commercial property. Well, that's totally wrong. And the reason for that is you can see a lot of metro properties that's literally doubled itself in the 7 or 8 years that people have held it in commercial property. And that's a lot of it in metro areas. But if you're looking at regional, a lot of areas have doubled in the last 10 to 12 years as well. So it's again about finding cash flow versus growth, risk versus security. So remember, if you want a personalized strategy, remember that if you're looking to get into your first commercial property, there's lots of naysayers out there, but nothing beats an action taker, because when you're an action taker and you're going out in the market, you are going to reap the rewards. Nothing like fortune favors a bold like commercial property. So if you're a little bit scared and you need some mentoring and hand-holding, reach out to me at helen@commercialproperty.com.au. We have a specialist buyers agency who can help you and make it a streamlined service, so it's set and forget the whole process from buying your first property, doing due diligence, negotiations, helping you to site the property, as well as settlement and beyond, and into property management all the way. So reach out to us, but in the meantime, hit the bell and subscribe, and I'll see you in the next episode. Bye for now.